Hello, everyone. Hopefully, everyone can hear me. If you can't hear me, or if you can, if someone could just type in one of the questions in the question button that you can hear me, I'd appreciate it. We'll get going. Okay, terrific. Thank you, guys. We'll give a few minutes. We got a lot of people that are going to be coming on here. Well, we got one can't hear me. Maybe you better check on your end. And let's give about 2 or 3 more minutes, and then I'll get going. Looks like a couple people are having trouble hearing me today. I'm assuming it's probably on their end because I'm getting a lot of people okay. Is my screen okay? Can everyone see the screen as well? Okay, awesome. All right, I think we'll get going. My name is Monty Tarnell, and I am the head of the disability department here at Back 9. I have been here for about 3 years, and prior to this, I spent most of my career with Guardian Life Insurance Company, which was over 25 years. So I've spent quite a long time in the disability marketplace, and I've worked with pretty much every carrier out there. So today, I just wanted to really go over the basics of disability. I know a lot of agents out there, sometimes they're a little apprehensive about talking about disability, mainly because they're experts in certain fields. And when they talk about disability, it's language based. And people get a little, concerned that maybe they talk about something they're not an expert, they lose a little credibility. So what I'm going to try to get you to understand is we really don't want to talk about product in the beginning. You want to talk about need and protection when you're talking about disability. It's probably the one of the most undersold products out there, and I want people to feel a little bit more comfortable selling disability, because without disability, all the products you sell your clients, they're going to be canceled as soon as they lose their income. So we want to make sure they always have an income coming in if they're working or not working. So that being said, I always like to talk about, the kind of did you know to start. And from the age of 20 on, what they say is about 1 in 4 people will become disabled. It's 25% of the working population is going to be disabled at some point. Now, it could be a short-term disability, or it could be till the end of their careers. So there is a high probability that someone is going to have some form of a disability in their lifetime. We just don't know how long it's going to last. The second one is a pretty big one, and that has to do with foreclosures and homes. And most people don't realize that, but 50% of homes that are foreclosed are due to a disability. It's an incredibly high number. But going through the pandemic now, we're seeing a lot of people realizing that their incomes can stop quickly for an unexpected event, whereas in foreclosures are probably even higher over the last 2 years. But statistically, they've been about 50%. Approximately 25% of working Americans have any form of private disability, and the majority of that are what they get through provided by their employer. So, which means 75% of the population has no coverage, and most of them are depending on the state or the government to protect them if they do get disabled. And I'm going to get a little into that. The other thing I want to talk about is that employer paid benefits, which most people don't realize. And I'm going to get a little bit more into employer paid benefits, because if you ask somebody how much benefit they're going to receive on disability, most people think they're going to get 100% of their income replaced if they go on claim. So we're going to get a little into that as well. Government, state, the Social Security disability insurance. This is a big one. A lot of people believe that if they lose their ability to work, that the government's going to step in and help them out. Well, if you can take a look, it takes up to about 2.5 years just for an approval. And if you think about it, there is millions of people applying for either unemployment, and this is even before the pandemic, for unemployment and government assisted disability. So you can understand that if you put in your paperwork incorrect, you're going to go to the back of the line. It could take 3 or 4 months before they even get to look at you or review your pages again. And even if you are one of the few that get approved, it's 50% of you, and you're only going to get about $1,100 a month. So if you're relying on the government to take care of you, you better understand what the benefits you can get and how long it actually takes you. Here in California, we have state disability as well, and there's a handful of states out there that do, but even those only cover you for 12 months. So if you have a long-term disability, maybe you'll get state disability, and then maybe you'll get the government-assisted Social Security disability benefit. But even if you do, it could be a much smaller benefit than you're hoping for. I want to get into the types of disability coverage because there is some that you've probably heard of and some that you may have not. The first is obviously individual disability, and we get short-term, which is 6 years to 2 months. And I wanted to put this in here that they do not cover maternity leave. I'm going to save you, a lot of you out there, a lot of phone calls to make. We get a lot of calls almost weekly for individuals may have left their current employer and they're on their own now, or their company doesn't have any group disability. So they're looking for maternity coverage. Unfortunately, individual policies do not cover maternity, only complications to pregnancy. So if you want to make a note, group disability short-term does cover maternity leave. So if they do have a group coverage at work, or if you want to help them put one in place, then we can get the maternity leave. But again, it's going to save you a lot of time because we do get a lot of calls on that. Long-term disability, anywhere from 2 years up to even some states still offer lifetime benefits, but you can buy benefits that pay for 2 years, 5 years, 10, age 65, 67, 70. And just know not every occupation is going to qualify for those. So it's really important that we do some fact finding and not telling your clients that you can get them something that they may not qualify for. It could be not qualified for because of their occupation. It could be because of their health. So, but we do have carriers that offer long-term disability benefits. The next one is business overhead. And oh, by the way, I see some questions coming out. If you can, I'll answer questions at the end of the webinar. So if you put them in there, I'll go through as many as I can. And if I don't get to yours, feel free to reach out to me after. At the end of it, I'm going to have my information back up, so you can send me some questions. I'll go through some before I finish this up, and then I'll be happy to do a one-on-one with you after. I've also in the chat box, if you're not working with Back9 currently, feel free to create an account. There's no cost to create an account. We're not captive agency, but you're going to get a tremendous amount of tools, including work with me. And then we have an unbelievable platform, which I'll be happy to do a demo at another time for you. So in the chat area, if you see, I put a link in there. So the next product we're going to talk about is business overhead. This is for owners of companies, and this basically will keep their doors open if they become disabled. It'll help pay their rent, their employees, their utilities. These benefits usually will go anywhere from 1 to 2 years of coverage. And the most important aspect, which I tell clients when I'm talking about business overhead, is it solves 2 really major problems. Number 1, it'll keep your doors open until you return to work. But number 2, if it's going to be a long-term disability and it's going to go far past the 1 or 2 year benefit that you purchased and you need to sell the company, it gives you the opportunity to sell it at fair market value. You're not forced to sell it because it's bleeding money. So there's really 2 good reasons to have business overhead. Buy-sell, many of you are aware of buy-sell for life insurance. If one of the partners passes away, it pays their beneficiary a sum to buy them out of the business. With disability, it's a little different because the partner is still alive, but he's not able to work in the business anymore. And same thing, if you want to buy a partner out, the money has to come from somewhere. You're either going to have to borrow it, you're going to have to take it out of your general account, or you have an insurance company fund it. And the insurance company will pay the company the funds, and then the company will buy out the partner that's disabled. And it's usually at least a 1 year wait, because they do give a partner enough time to return to work before they do initiate a buyout. Key person, just like it means it's a key person of your company. This is a person that if you lose this individual, it's going to affect the bottom line of your company. You may now have to go out and hire an executive recruiter to find your replacement for that person, but it's going to affect the business financially. The individual itself does not receive any of the benefits. It goes directly to the company. So a lot of carriers in a lot of states don't offer key person coverage anymore, because the individual that's taking the policy out gets no benefit from it. But we do have carriers that'll do it. So just know we always have a carrier that for every situation out there. Loan indemnification is probably the one that most of you have least heard about. Lenders now, when doctors, dentists, other owners are buying practices or taking out loans for their business, they're requiring not only a life policy, but they're now actually requesting that you have a disability policy as well. Now, a lot of people will just say, oh, well, I'll assign my individual policy to the lender. Well, you don't want to do that. Number one, it's a lot more expensive policy for an individual covered, and you bought that policy to pay for your rent, your mortgage, and keep your lights on. So do you really want to assign all those to a lender? And you can maybe look at your business overhead policy and say, well, I can do it on that too. Yes, you can, but it's limited to 2 years on a business overhead policy. A loan indemnification, a lot of times we can actually match the loan. Usually they'll go up to about 10 years for a loan indemnification. It's a lot less expensive than the other two products. It's going to satisfy the lender. So let us know. There's only a handful of companies that even offer this, but we do get a lot of requests for, now it seems to be more often that lenders are requiring both life and disability for loans. Now we have the type of disability contracts available. This is where people get a little concerned about talking about disability, because there's really 3 different types out there. There's a TrueONOC, a UROC, and an EOC. TrueONOC is the strongest contract available. And to give you an example with TrueONOC, and I put regular occupation because like Principal uses this terminology instead of this, but they're the same. If you had a surgeon that had a TrueONOC policy and he got arthritis in his hands and could no longer hold a instrument anymore, and he said, I can't be a surgeon anymore, but I can teach, or I can go in another field of medicine, or I just want to sell real estate. They say, great, as long as you're totally disabled under a TrueONOC, doesn't matter what you make outside of it, you're still going to get your full benefits on TrueONOC. Even if you started selling real estate and you make $1 million a year and you were making $300,000 a year as a surgeon, you're still going to get full benefits on the contract, regardless of how much money you make outside of that. And that's with anybody. Even if you get a real estate agent that no longer can walk through homes because they have trouble walking, but they started a home business, again, TrueONOC. Just so you know, TrueONOC is not available for every occupation. So just be aware of that. So if you want to sell someone on TrueONOC in the beginning, you could really get egg on your face if their occupation doesn't qualify for it. So again, don't always sell the language, but I want you to understand the language. TrueONOC is for the medical field, the dental field, anybody who's in white collar occupations, even gray collar occupations, it's available for, but some don't have it. Your own occupation, just remember it's your choice. So if we take a surgeon again, that let's just say he has a UROC occupation definition. In this case, it's his choice. If he can't be a surgeon anymore, it's now his choice if he wants to go out and try to start a new business. But if he starts succeeding in that business and making a large income from it, they can start reducing his benefits from his disability policy. But again, it's your choice. He can decide he just wants to sit on the beach or stay at home and watch TV because he can't be a surgeon. He doesn't really want to go out there and try to start a new occupation. Again, it's your choice. The last is of the 3 occupation classes is any occupation. And you're going to see a lot of this on your group policies. Some of them have true ONOC for the first 2 years, and then it becomes an any occupation. Any occupation means it's now the carrier that can go step in. They could look at your resume and say that you're skilled or you're trained or you're educated in another field. And they can actually say, look, if you don't go out and try to do one of these occupations that you're qualified to do, we can stop your benefits. So on an any occupation situation, it's now up to the carrier to make a decision if your benefits can continue or not. Now, if you're totally disabled and can't work in any occupation, then you're going to receive full benefits. But an any occupation does now have the carrier, gives them the ability to step in and make decisions on if they can continue or not continue on with your benefits. So just understand, those are really your three main types of contracts out there. There's a couple other ones like transitional ONOC, that a traditional occupation, like with principal. We can get in that another time, but these are really your basic ones. So if you want to review someone's contract, and I'm more than happy to help you do that as well, we can look at the contract and see what they have. Then you have what's called guarantee renewable, which this means as long as you pay your premiums on time, the carrier cannot change, they cannot cancel your policy, or they cannot change any of the language in the policy. They can, though, raise your premiums in the future. They can do it only, though, if you are, if they do it for the whole group. They can't do it individually. So if you went on a claim and came off a claim, they can't zero in on you specifically and raise your rates. They have to go to the state and they have to show that this group is losing money, and they can go in and do a rate increase. But if we have a non-cancelable contract, which a lot of companies are, some occupations don't qualify this, but if you have non-cancelable contract, that means they cannot raise your premiums. Most of the carriers until age 50, until age 65 or 67. So if you have a non-cancelable contract, they cannot go in and raise your premiums ever. You know, until you reach an age of 65, which is retirement age. If you're still working, they can go ahead and make adjustments to your premium at that time. I like to talk about the key riders because we get a lot of quote requests and people don't know what to put in the riders, or sometimes they don't want to add certain riders to the contract for, they look at it for cost potentially. Excuse me, let me just clear my throat real quick. But the first one is partial and residual, which is the same exact thing. It's just a different language, different in different states, they require different carriers use either partial or residual. It's the same exact thing. It just means that if you are still working in your occupation, but you can only work on a part-time basis now, maybe you're going through treatment or therapy, or you're, you know, a bed rest for half of the week, but it's now affecting your income, then you are eligible to receive partial benefits because you're still receiving partial income from your employer or your job, and now they're going to kind of make up the difference by paying you a part of it. I recommend this on almost every policy that's sold. There are some occupations people that say, look, I'm going to either work or I'm not going to work. I don't need it. That's fine. It's up to them, but I would absolutely include it on all illustrations. Cost of living adjustment. Now, just so you know, on a group policy, if they have through their work, most of them don't have any inflation riders, which I'm going to get in a little bit when I get to the group section of it. But what this does is it, once you're on claim, if you've sold long-term care insurance before, COLA works a little differently because on long-term care, COLA is allows you, it increases every year regardless if you're on claim or not. With disability, it only begins on the first anniversary after a claim begins. And mainly the reason is if someone bought a COLA early on and it was increased every year, there could be a time where your benefit surpasses your actual income. So, but there's ways that you can increase your policy in the future, and that's what the next one is, the future purchase option. What this does is we're underwriting today for a potentially increasing your benefit in the future. If you have this on your policy, it means you no longer have to go through any medical underwriting in the future, only financial. So if you have someone that has a policy in force, they wake up with chest pain, and they say, oh my God, now I'm concerned. I hope I have enough disability insurance. Well, they just have to wait, usually their anniversary. Some carriers require it every third anniversary, but they only have to submit their tax returns. They don't have to submit any medical underwriting whatsoever. As long as they qualify financially for it, they can increase their benefit. So it's an extremely important rider to have. They also have a catastrophic rider, and it's very inexpensive to add this rider on it to your policy. And it's similar to long-term care. What this does, if you have a catastrophic, it could be your ADLs, like in long-term care, activities of daily living, cognitive impairment, could be the loss of sight, speech, hearing, 2 limbs. This will pay in addition to your disability benefit. So if you need care at home, like the ADLs, now not every carrier offers, they have a basic and an enhanced. You just have to make sure which one you're selling your client. If it's just basic, they don't cover ADLs. If it's enhanced, they do. But it's very inexpensive to add a rider, and you're almost like selling them a long-term care benefit on top of their disability. So I'd always at least look at that. And I tell agents when I'm working with them in the beginning, show your client every rider. Number one, let them make a decision if it's too expensive or not. But you don't also want to find yourself in a situation where someone goes on claim and then they find out that they didn't have an inflation rider and they now blame you, and then you have to work on your E&O insurance because they're going to sue you. So it's always important to show them everything, and then you can go through each rider with them. These are the most common illnesses for disability. Your musculoskeletal, this could be your back, your joints, neck, shoulders, your nervous system. These can even be migraine headaches. Could be a stroke. It could be cognitive impairment. You have your cardiovascular, your heart, your concerns, your cancer. Mental nervous, this is like depression, anxiety. And just know in some states, they do limit these benefits for mental nervous. Here in California, we're limited to 2 years. There's one carrier that'll go up to 5 years, depending on your occupation class. Other states, it's unlimited. It's the full length of your benefit period. So if someone's concerned about the mental nervous because they're concerned about depression, anxiety, going on claim, you can just look at your state and see which one offers that. And just know if they currently are, taking antidepressant medications, or they've had situations, the carriers could exclude mental nervous altogether, so they'd have no coverage on it at all. The need for disability, just going through COVID right now, we saw what happening to people in their incomes. Unexpected events. No one expected COVID, and millions of people had situations occur where their income stopped. So it's the same thing. The good thing with the COVID, well, not a good thing, but the thing with COVID is the government stepped in because it affected millions of people. That's not going to happen in the future. If it just happens to you, no one's going to step in. So, you have all your expenses that you need to take care of, and that's really the need. And if you have no safety net, then we go back to just looking at the foreclosures of home, which is 50%. They could easily fall into that category. Alternative sources, if you do go on disability, what plan do you have? We know you're going to go through your savings and assets first, just to pay your bills. You may have to start rating your retirement plan. And anybody on the call that does money management, that's the last place you want your clients to go, is start looking into their retirement plan, to start taking that out early and getting penalties. Sometimes they can waive some of the penalties because you are disabled, but depending on the situation, they could do penalties on that. Borrowing is probably the most difficult thing, especially if you have no income. Now, one thing I like to talk about borrowing is we get a lot of calls for people that want short-term disability. I'm not the biggest fan of short-term disability, because it would be a lot easier for someone to find money borrowed from family and friends. If they need to survive for 3 months, if they need to survive for 3 years, they're going to be in a tough situation. So sometimes when you look at short-term disability, also take a look at long-term, because a lot of people, when they look at short-term, I want a 30 or a 60-day elimination period, maybe 6 months or a year. Go ahead and look at a 5-year or 10-year with a 90-day elimination period, just to see the cost difference, because now you're buying a lot more coverage. And again, if you go to, even look at borrowing, if you go to a bank and they say, look, you're disabled, we can't loan you money. So, well, I have a disability policy, and I'm working with a claim adjuster. They're waiting for my elimination period to expire. I'm going to be receiving X amount of dollars. It's going to be a lot easier for you to get a loan if you have a disability policy in hand, because they're either going to go back to work or you're going to go under claim. So just something to think about. Obviously, family and friends can only loan money for a certain amount of time. And if they don't believe you're ever going to go back to work, how long is that going to last? Social Security, again, we can go to Social Security disability benefits or just go on Social Security. It is very limited in how much you can receive. And then you have your employer benefits, which could be your group um, disability policies through work, which is great. I mean, if you have it, you're a step above everybody, 75% of the other people out there. Or you may have some sort of retirement plan in there that you have to cash out. So these are the most common objectives, and I'm going to go through each at a time. The first one, which I've talked about before, is I already have disability coverage through work. So I said, all right, great. Let's take a look and see what that really means. I said, most people, do you even know what you're going to get if you went on claim tomorrow? Most people say, no, I don't know. I'm sure they're going to cover 100% of my income. Well, let's take a look at your plan and really tell you what you're going to get. So in this case, we're looking at an executive that makes $150,000 a year. Their group plan in force, it pays, whoops, I'm sorry, let me go back there. Pays 60% of your salary. And by the way, salary is very important because a lot of group plans out there do not cover bonus and commissions. So you want to find out if they do. In this case, we're going to say this person does. Their whole 150 is covered under their group plan. So they're currently generating, they're grossing 12.5. We're going to use a 35% tax bracket. Here in California, it's closer to 90, so we work for the government out here, but let's just say for argument purposes, it's 35%. So their take home right now is about 81.25, and they're expecting that they're going to get an annual increase or raise about 3%. So over their lifetime working at this company, if they stay there for 25 years, they're gonna gross about almost 5 million, and after tax, they're going to be taking home about 3.5 million. Now we have the same employee, this employee B, but this person got disabled. Now we're saying, all right, well, you're getting 12.5, your plan covers 60%, so that's $7,500 a month. But wait a minute, it's pre-tax. You didn't pay anything for this benefit. Your employer did, and your employer's been writing off the premiums through the business. So the government says, well, no one's paid us anything. Your company's been writing off the premiums. We need to get paid. So this is what you're actually, you're going to get this 48.75 after taxes. That's about a 40% drop in take-home income. And again, most people have no idea what their benefit's going to pay. So over the age of, oh, by the way, this 48.75 most likely does not have any inflation protection. So that's it. That's the amount that they're going to be receiving up until age 65 with no increases, which is about a $2 million, almost a $2.1 million loss between these two employees, because this one is continue working and this one is relying on their disability benefits alone. So what's the solution? So we have what's called gap insurance. So again, this person's before disability we're netting 81. Now they're netting 40.50. So they have about a loss of about $3,250. So what we can do is we can put in a individual policy layered on top of their group. And by the way, the group is not portable. So if they leave their company and they go somewhere it does not have a group, they lose it altogether. There are a few carriers that do offer portability, but most companies don't purchase that because there's additional cost to that. So in this case, we're going to look at purchasing a additional coverage of $25.80. It's tax-free, and when I say it's tax-free, when you pay for disability benefits with after-tax dollars, all benefits are received tax-free. Because your group plan was paid by somebody else and you paid nothing for it, it's taxable. Individual disability, you're going to pay with your own dollars after tax. So in this case, and basically we're going to get them additional $25.80. So in this case, we have a male 40 executive. He's a class 5, and we can get in later in another time occupation classes. But usually this is for more white collar attorneys, CPAs and stuff. We'll get class 5 executives. So we got this an additional $25.80. The benefit's going to pay to 65. We have the partial just in case he can only work on part-time. It's affecting his income. We have future increase of 51.60. So this means he can buy up to an additional 51.60 in the future on top of his 25.80 if his income goes up and he qualifies financially. And in this case, we added the inflation rider, the 3%. So this benefit will increase every year, while the 4875 will not. And what we did is we've added potentially an additional 1.1 million um, for this individual. So we've more than cut in half what they could potentially lose by just relying on their group coverage. Now, if we look at someone making 300,000, it's even worse, because remember, again, they have a $10,000 cap. That means that's the maximum this policy is going to pay them. Doesn't matter if you're making $1 million a year. You're only going to get 10,000 from your employer's policy. In this case, this individual's income went from 16,250 down to 6,500. That's a 60% loss of income. And over the period of the working years, someone working all the way to 65 is going to generate, based on the 3% increase, about 7 million take home, where now this individual has only a little under 2 million, and they basically lost about 5 million, over 5.1 million dollars over their potential working years, because they became disabled and remained disabled all the way to retirement. In this case, we were able to, it's a $9,750 loss between what they were earning and their group. And we can purchase them an extra $86.70. Again, it's tax free. Again, we put in the inflation riders. The premium on this one's about $5,400 a year, which is about 2% of their income. So if someone brings up group, you now have something to talk about, instead of saying, oh, they already have group, they don't really need anything. And again, most people have no idea what their group pays until they become disabled, which is too late to do any planning. The next one is it's too expensive. I mean, this is probably one of the biggest, and I cannot argue that disability is not an expensive product, but it's a safety feature. You're hedging your income on a little amount, and we'll get into exactly how small it is when you really look at the dollars and cents of the cost for benefits. Again, we're using a 40-year-old executive, so these could be a little different. If someone has a lower octave class and they're paying higher per 100 for their premium. But let's just say this person paid 2 years worth of premiums and just 1 month on claim. They're going to get all their premiums returned just on 1 month of claim. Even if they paid 20 years of disability premiums, 1 year of claim would basically cover what they've paid out in benefits. So if they went on claim for 2 years or 5 years or 10 years, obviously this would be the cost per benefit is extraordinary. The return on investment, I would say, is much farther than they think in their head. The average cost is about 3 to 5%. Now it could be higher. Like, just so you know, with life insurance, which most are used to, female rates are lower cost with life insurance. It's the opposite with disability. Female rates are higher. So we can quote, say, someone like a nurse, a female nurse that's 45 years old. She could actually pay up to 10% of her income to cover the cost of it. But on average, it's about 3 to 5%. So, I mean, these seem like silly questions, but if you ask your client, let me ask you a question: if your income decreased by 5% next year, would it affect your lifestyle? And most people will probably say, no, I don't think it would. And that's really what we're looking at, because that's the cost of the disability benefit. Well, what if your income decreased by 30% next year? Now we're looking at that they have a group plan in force, but they don't have any gap coverage for that. They say, well, yeah, that could really make a big difference. And again, this 30% could be even higher depending on what their income was compared to what the benefit paid. And then the next one, we know that they're not going to be totally at 100%, but if your income decreased by 100% next year, would it affect your lifestyle? So these are simple questions. They're kind of comical to ask, but they make people think. They think, wow, I didn't really think. I mean, if I made 100 this year, I made 95. Yeah, it really wouldn't, change my lifestyle very much. But if something dramatic happened and I lost far greater than that, then again, I could be one of the homes that foreclosed. I could be hoping the government can step in and help me, and I could be going through all my savings in retirement. This is the one we get a lot with: as long as my mind works, I can work. And these are people that, like I said, attorneys, CPAs, bankers, money manager, finance, engineers, technology. These are the people that sometimes give pushback because they really never see themselves not being able to work. They think, because as long as their mind's working, boom, I'm going to go to work. I always use the big three: cancer, heart attack, and stroke. Any one of these three occurred, let me tell you something: you are not thinking about reading documents. typing up memos. You're not talking about calling clients or going to meetings. All you're thinking about is getting better, taking care of yourself, going to treatment, going to therapy. So I always say the big three when people bring up that, I can go to work no matter what. Well, we hope you can, but in case you can't, these are three things you should really think about. Target markets. Look, when I talk about target markets, everybody's really a prospect for disability. If you have people that are earning under $50,000, disposable income, they may be living check to check, so it may be difficult. But again, everybody is a target market for disability insurance. The biggest group, which is on the top, which is the medical and dental, about 75% of them own some form of private insurance, disability insurance. Especially doctors and dentists, when they're in school, medical school and residency, they're bombarded with people trying to sell them disability insurance. Now, this could be a great opportunity. There's two opportunities here. There's a lot of times they're sold a policy during their medical school or their residency or fellowship, and no one's ever bothered to come back and talk to them, and now they're making $300,000 or $400,000 a year. So it's a good time to review their coverage. Also, if you have medical groups, or if you're talking to some of the partners in a medical group and they have a group plan already in force, there are contracts out there that are specifically designed, group contracts, that we can carve out just the doctors and give them the strongest, true own occupation definition. So just put that out there. If you talk to somebody that in the medical field that already has a plan in force, we may be able to look at that and replace it with an even stronger contract, because they may have something for their entire office, all the employees, everybody who's one of the partners or not a doctor, and we can carve them out. Just they can even stay with the group coverage they have, and we can move just the physicians outside of that. Attorneys are a very large group too, so it's always a good occupation to look at. But again, finance, engineers, technology, architects, real estate. Again, somebody in the real estate market, just showing a house, if they can't get out of bed because of their back, they're out of business. Construction. Now we're talking more of contractors, estimators, executives, but again, we do plumbers, we can do carpenters. So don't think anyone is not. There's a lot of people out there, that truck drivers that make $100,000 a year. So we do have products for them. They may not be the same as the medical field or the white collar, but we do have contracts out there. Business owners are great. We have a lot of different products, individual overhead, the loan indemnification that I talked about, and then your highly compensated employees. Even if they have group in force, some are making $500,000 a year. Their group plan may cap out at the first $200,000 of income, and then the other $300,000 is not covered, or a lot of it's commission based and they're not covered. We work with at least 12 carriers. I mean, we work with a lot of different groups. We work with specialty carriers, and we can do monthly benefits, and that's not a typo. We can do 500 up to 250,000 a month. That's $3 million annually of benefits. So, and we have specialty carriers that will write huge policies. Traditional carriers do have limitations. You may be able to get 35,000 a month with the traditional carrier, but you're talking to somebody that's making $5 million a year. Could be entertainers, could be athletes, could be people in tech, could be attorneys. So don't ever think that if they tell you, oh, we're maxed out, that they're maxed out. We do have other products for them, and we can write huge policies. We also offer traditional groups. So if you do have group plans, and a lot of times group plans really come in play if you have somebody that has a health problem and they can't get traditional carrier. Group plans are guaranteed issue. You only need two lives to get just a small group. You're not going to make a lot of money on it, but you're going to do a good service for your client, because we can at least get them some disability in place. What usually happens with a group is they'll have a pre-existing condition for 1 year. So once a policy has been enforced for 1 year, and year 2 and on, there are no exclusions to those. So that's always a good one. We do also have individual guaranteed standard issue contracts. So it usually requires 5 lives or more and employer paid. So if you have a large group and there's 25 people and they want to do a voluntary plan where, if you want to do it, you do it on your own, the employer's not involved. Those are tougher. But if you do have a group, and even a carve out, they could already have the group. So now you got a group, there's 20 people and you got 5 partners that make a lot of money, and maybe one of them's got some health concerns. We could do guaranteed standard issue with 5 lives when employer paid. Just remember that. We have carriers for health issues. I've already talked about high limits, high risk occupations. We do entertainers and athletes as well. So pretty much anybody you have, doesn't matter their health situation, doesn't matter their occupation, we can find a carrier for them. So, and always feel free to reach out to me. Like I said, if you haven't worked with us before, I put a link under the chat section so you can create an account with us. I'm going to have my information in a minute so you can call me or email me if you have additional questions. Plus, I'll go over some of the questions too in a minute once I'm done. The opportunities we have, policy reviews are always great. Like I said, even with like the medical field, a lot of people haven't looked at their policies for 5 or 10 years. Someone sold them a policy and they disappeared. So, and this could be on individual or group. We may be able to find them a different group product that's better suited for their occupations. We can do carve out for the medical group. Then you have individual health issues. You may talk to someone, yeah, I applied for disability, they declined me, or they rated me. It was a really not a good offer. I just decided not to take it. And again, and the last one again is the high earners, the athletes, the entertainers, and all that. This is what we need to run a quote for you. So if you want to make note, call me. I can always send this to you as well. But we need their birth date, male or female, smokers. Occupations. When you get an occupation, especially in the medical field, we need to know what their specialty is, because most carriers that underwrite the medical field, there's 3 or 4 different occupation classes depending on their specialty and their daily duties. So if you call us up or send us a request and say he's an owner of a company, well, what does he do? What type of company is it? And what does he do on a daily basis? If someone owns a cleaning service company, are they actually, and they only have 3 employees, are they actually going out and cleaning themselves if 1 or 2 of the employees don't show up? Or do they have, 15, 20 employees and they're just doing the executive duty? So we do need to get more clarification on what they do. When it comes to income, all earned income qualifies. So it doesn't matter if it's your salary or bonus, K1s, if you're paid 1099, if they are 1099, if you look, I said benefits are based off after business expenses. So if someone, because a lot of employees now the employers are making them independent contractors, so they're taking them off all their group benefits. But when you become 1099, you do have the ability to write off your business expenses. So at the end of each year, you do have the ability to, you may be getting paid $100,000, but you're writing out your car and some other expenses. So you're taking home 80. That's what the insurance company is going to base it on, the 80, not the 100. We need to know if they have any in-force coverage. And they could have an individual policy already. They could have group, but we can't go above the carrier issue and participation limits. So it's important to find out if they have anything in force. And the most important with disability underwriting is not the easiest in the world, is their health history and medications. So that's why, again, when you're talking to clients, don't get into products right off the bat. Don't tell them you're going to get them true knock, you're going to get them a lifetime benefits or to age 70. Let them know, do some fact finding, send us the information, and then we'll give you the best product for each situation. But again, need is so important to find out, and explaining, talking about their safety net and finding out what they actually do, what they have in force today, if they have any group, if they've never done anything, why they haven't done anything, and that's really the most important part of talking about disability insurance. So I just wanted to keep this really, really basic today. I hope if you haven't sold disability in the past, this gave you a little more comfort in talking about disability. Again, this is my information on here. Feel free to reach out to me anytime, call me, send me an email. If you're not working with Back9 yet, go ahead and go into the chat box and click on my link, or go ahead and send me an email or call me. And I'll be happy to set up a meeting with you and give you a quick tour of our platform. We have one of the most amazing platforms out there. On the life side especially, we do long-term care, we do annuities, we do a ton of life insurance, and obviously we do disability. So feel free. I'm going to go read a couple of these questions for you. I have a lot of them, so I don't know how many I'm going to get through. but let's take a look at some of these and see. Does California state disability cover maternity? I do not believe they do, because that is not a disability. Maternity leave is normal pregnancy. So, but again, you could probably go online and find that. But usually when you're dealing with the state or the government, it has to be a disability where you're unable to work. Maternity leave is not considered a disability. Yeah, got a few minutes, sure. At what group size does BOE phase out? So BOE, business overhead expense, it's really, it depends on if one person leaves a group, how would it affect the business overall? So if you had a group, like we have 5 individuals that might want to do business overhead because if one of them is out, 20% of their revenue could be lost on that. So they do want to have buyout for all 5, and there is a meaning if one of them leaves. But if they work for a company with 100 employees and the owner is unable to work for disability, a lot of times carriers will not do it. But there is no set number on how many employees they have or how many owners they have for a business overhead policy. Let's take a look here. Carriers are saying that they phase out 25 employees and up. Okay, that's again a BOE question. Kind of answered that. Any of the business insurance policies deductible? Yes. Business insurance are all deductible. So you can deduct if it's buyout or if it's loan indemnification or if it's buy sell, they're all deductible through the business. Individual in policies, I never want to tell anyone to deduct those, because again, once you deduct those, they become a taxable event to you. We have no idea where taxes are going to be in the future. So if you pay with after-tax dollars, you have no situation in the future with taxes. Every dollar you're going to get is tax-free. All right, let's see. How do I get certified to sell disability? All you need is your life insurance. There is no specialty required like long-term care or annuities. You don't have to have a special license to sell disability. You just need your life and health insurance license. We do offer short-term. Someone asked if we offer short-term. Yes, we do. On our platform, we do have a quoting tool. So you can go ahead and just put in a quote request. Again, if you want to look at short-term, look at long-term as well. The dollar, sometimes if you're looking for a short elimination period with a short benefit period, sometimes getting a longer elimination period and a longer benefit is similar cost. And you're going to do your client a much bigger service by protecting them for 5 years instead of 6 months. All right, let's see. Okay, okay. It seems like baby delivers covered in California. Someone just put that in there. So again, you can go check that out and see. Maybe it is under the state, but under individual disability policies, it will not, just so you're aware of that. So under the group plans, they will. Under a individual policy, they won't. So again, feel free to reach out to me. I hope you learned something today and got a little bit of information, make you feel more comfortable. Again, I am always available. Call or email me to get together, set an appointment. I'll even give you a tour of our platform. So other than that, have a great day. Feel free to reach out and have a great rest of your week. Bye-bye.